Yeah.
Hello, guys. Hello, guys. Can you hear me? Yes,
Probably
perfect.
not my room. Now that I think about it, I don't know if I have room. Okay.
Perfect. Just wanted to be sure that I got all this set up correctly and that you have the audio was in good shape here. I'm gonna mute everyone, guys. You can always unmute yourself. If you want to participate or have any questions, feel free to do it. It's just to have everyone muted just in case that someone open up the gets into the class and lecture and then forgets to unmute themselves, and then we have some noise in the back. So, but feel free. Can you share that PowerPoint, please, or is it on the tablet? It's Fernando. The PowerPoint, the classes are posted live always the day after, and this is not a new class. We have done this one like a 2 months ago, but I'm repeating it because we have a lot of new members. So, and I find that Candlesticks is a overlooked subject that we need to focus a lot on how to read it. I think Candlesticks, the reading of a candlestick while we are trading, it's like reading music while we're playing, and it's very helpful once we get a hold on how the candlestick works, what they're telling us. And one thing that I would like to touch here, it's how the different time frames work. But it will be on the live uh, sessions, lectures. All the lectures are pasted there the day after. And if you need further help with that, just DM me, and I have like a sort of a link with all the lectures that I've done that you can just browse them on YouTube there. I'm just gonna wait a couple of minutes for more people to join, and we'll start here. How was everyone trading today? Had some fun. How was it? We got some good moves today. Like we have a double top with rejection, and then a bounce back with a new high on the day. That's pretty interesting on SPY and the Qs. It was down to 101 point. You made it back, Nash? Gail. Oh, you made $5. Yeah. Gail, you were down today? What happened? You ended up trading SPX at the end of the day, and you got one of those big rejection candles. End of day was a little bit tricky. Yes, sir. Yeah. Clandestine ops from SSL. I started out good, but SPX wiped me out. Yeah, that's the problem with SPX. It can be a darling when you grab it on the good side, but it can mess up your day for sure if it's on the wrong side. But it happens. You've been doing really well, so average, you're still positive. So yeah, I hope that you were not too big on that one. My entries were bad. Yes, I'm still positive overall for July. Great. That's what's important. Um, one of the things I think someone was writing here, not to, yeah. Annotate. I don't know how. Disable annotation for others. There you go. It's all right, guys. I'm gonna start. Yeah, I'm still passing. I don't know how to erase this thing here. I forgot how to erase this. Annotate remote control meaning. I think that's gonna be on our video right now. I don't know. Did anyone notice anything on their charts? I don't know how to take this away. If anyone knows, just let me know in the chat. How to erase that little thing there. Yeah, not to. Someone was writing not to something, and I already
Fuck, do I delete this?
Disabled the annotations, but this is gonna be, I think it's gonna be on every chart. Yeah, let me just stop sharing for a second here, and let me just reshare back that one, so we don't have that thing there. There you go. Thanks for the idea. Works. How not to read candlestick. Yeah. All right, guys, let's start with this. Let's have some fun. Remember, this is a basic class on how to read candlesticks, how to mix them with our levels, our indicators, and overall, remember that trading, it's a mix of different signals that we get on the price action, and the price action is going to be composed by the candlesticks, our indicators, our dynamic indicators, which is all the Bollinger Bands, the SMAs, the EMAs, and then we're going to have our fixed levels, which is the price levels. So on how to read the candlesticks, this is very, very important and very nice. I mean, I love this presentation. I love talking about candlesticks because, as I said, I think sometimes people don't pay attention into how important this is. Sorry if you hear a little noise on the background. That's my wife playing around with we have a little puppy, a new dog, so she's like pissing around the whole house and stuff, so we're just running behind her. So 4 parts of a candle. I love this. It's the open, the high, the low, and the close. We're gonna have a peculiar difference between the green candles. She's still not potty trained now. I mean, she goes to the pad, but she goes 8 out of 10 to the pad, and then 2, it's either in the floor, the rug. It's a little messy. She's 3 months. So, she's been with us like for 3 weeks. So we're there. But here we go, guys. Green candles. Normally, every green candle, and this is a way that you need to get this tattooed in your brain. Every green candle open in the lower section and it close in the upper section. And then every red candle opens in the top section and closes at the bottom. So every time that we see a mix of candles, one after the other one, remember, every time the green candle, what it does is it opens on the lower section. Sometimes it reaches a little lower and we'll see it as some red, but it's a little fake out. And then the buyers step in. That's when, when we see the body getting wider, that's when the volume on the buyer side still a lot stronger. So we leave the week, like this was a test. The bears try to push the price action to a lower level, but the buyers bought it, and then the volume stepped in all the way here. But here we have some sellers again, and those sellers when they stepped in and fight against the buyers, this is where we close and we jump to the next candle. So if we were to read this next to this one, we will see that this will be the open. We have a little fake out, so you got to be careful not to be like, okay, I'm going to be out of this position just because it went down. This is just a little wick, then the volume came in. Anytime that we have this sort of movement, remember, when you are on maybe doing a quick scalp, you need to try to get out while the body of the candle is, the heaviest. So the IV is going to be the strongest on your contract. If you try to just capture the most, like the part of the of the uh of the candle, it's really tricky. So sometimes you can just be faked out, and then the IV is going to come down, and then it's not going to be the price that you. This is what happened when we have the market close. You will see that the price is at 300, and when you market close, it closed. Your price action got filled at 267 or whatever, and you're like, what happened? I mean, I saw my gains was 300, but the reality is that the price action went here, and while it was getting filled on your contract, it got filled at 200 something. So, and then, so we started the price action here, got a little lower, went all the way high, and here we close, and boom, we jump to our red candle. So what happened to the red candle? It opens here, it goes back again up. So this is the contrary sort of fake out. We go higher and we think, okay, this is the open, and then we're gonna keep going up. No, buyer stepped in, volume steps in. We see the bigger, body of the candle being wide. A lot of this is a trend. This is when you see the body, we call it like this is the strong trend on the upper side, strong trend on the downside, and then it went all the way here. Then you try to get filled, and it gets close and jumps to the next candle. So always remember, every ring candle opens at the bottom and it closes at the end.
That all the time.
And it's the wick on the red candle, a place you can scalp up top. Well, the problem with this up top here is this is the open. So when you're here and this breaks to here, you can scalp if you're scalping on the upper, like if you're going to the high side. If you're trying to go to on your high side on the price action, and you were in this position, and then it breaks here, you can still get out here if you are in the bullish side, but then the price action is going to drop like dramatically. This is what happened. For example, this is a perfect example, Gail, of SPX. Go here, you will see this price action going here, and you are like, I'm just going to wait, I'm going to wait. Then it jumps to the other one, you see like, okay, we're going higher, and then all of a sudden these things drop so hard that the IV on those contracts, like while you were $300 up here, when you're here, it can be like 150. And you are like, but what happened? I mean, why, if I'm just not that far away from where we were, why the contract got drained so much? And that's what happened with SPX. SPX IV, when it's going up and the volume is going up, it's humongous. But as soon as it gets a little weak and it goes high and then start going down, you can just lose $200 from here to here. And from here, just the contract goes absolutely to zero, completely drained. So that's why you gotta be very careful when probably everyone who has been on VC with us and with Flips and I, you will see that you always wait for the candle to close to get into the trade to see what's going to happen. If we're going here and you try to get into this position, we don't go in while the candle is moving around, because we don't know where the candle is going to go. We just get in when we have a confirmation of where that trend is going. So we got to be very careful with that. For starters, we shouldn't play SPX. Yeah, Fernando. SPX, it's I mean, you can. My advice with SPX, guys, is if you're green for the day, you can play around with SPX at the end of the day, or if we'll see like a huge trend somewhere on the day. But if you're trying to make your money only playing with SPX and you're not a seasoned trader, you're gonna make some money, but probably average, you're gonna end up red. That's the average. So you gotta be very careful with SPX. It's amazing how fast and how quickly it goes, but as I said, as quickly as go, and then it's 2 times faster when you lose it all. So just be very careful. I'm not saying that you cannot try and see how it goes, experience it, how the price action moves on SPX, but just be careful. That's all I can say. You have Flips, which is a He's been for, a lot of years trading, and he was trading SPY most of the time, and then he jumped into SPX when he thought was ready, and he had some. It all comes like, if you have a technique, if you have a method that works every time that you try to play a certain name, and you can repeatedly, find that 10, like 7 out of 10 times he's positive, then you can do it. But you have to find what that method is for yourself. So this is again what I was talking on the previous slide. These are the parts of the candle, how the candles work. This is the body. This is the body, and then we have the high or the low of the session. We call it the candle, the wick. So the body, when you see a big body like this, it's strong buyers are in control, because you see, we have no lower wick, huge volume here on the way up. So anyway, a little lower. When we have this little rejection here, this is a weak price rejection. Not, a little weak, but when you see the body being as, solid as this, is a strong buyers in control. And remember, we open and we close. And then we have to read, like music, what's the next note? What's the next, candle is gonna tell us? Are we going up? Are we going down? Are we still going up, but maybe the volume just, it's fading away? We got to be very careful with that. And we'll see some samples where we can be faked out, because depending on the time frame that we see it, it's going to change. So this is very interesting on how we need to jump from one time frame to the other one. This is a strong price rejection, as everyone can assume. You know what happened here. So what do we know about? We open here and we close here, right? So what happened here? We open, we went all the way here, and you thought that this thing was, we're on fire, we're, rocketing upside. Are we going to keep going up? And all of a sudden, and again, this is the sort of move that SPX does at the end of the day. You will grab the contract here, you will go and you are like, oh, I'm going to keep holding, I'm going to keep holding, I'm going to keep holding. And all of a sudden, pull back. What happened? The sellers stepped in, take all the price action here, and then we go to the next candle. But you thought that your price action was going all the way here, and maybe you tried to get, fill anywhere here, and then you got fill here. Maybe this is the same fill that you got at entry, or maybe even lower. So you end up red, and you are like, what happened? I have no clue what happened.
Hello?
Yep. Okay. So you got to be very careful with that. Remember, open and close. We open and went all the way down and close. And then this is, but one of the things that we need to remember, and every time that I chart, I use this weeks as a reference. Why? Because this meant that even though we got rejection, buyers, they had a sort of interest in going all the way to that certain price, but sellers stepped in and, rejected that level. So this is very, nice, because every time that you see a candle like this, you can, assume what's happening right now and be careful what's going to happen next. So now we have, what's the different variations that we have when we're talking about the body of the candle, the wicks, and, what that means. And the idea of this lecture, guys, is that when you're trying to find what name to trade, in the pre-market, you go to, let's say, Apple, and say, okay, I'm gonna. You're in the 4 hour, 1 hour, and Apple has a great trend. And then when you zoom in to a 5 minutes, you start watching the candles in a different way, and you need to be able to see what the candles, are telling you. It's getting weaker. It's getting stronger. This is very, very strong, So small wicks. This means that it tried to went up, trying to went down, and nothing happened. This is where the price action happened. Then we enter here, went all the way up. When we enter here, actually went down, nothing happened, went all the way up and got out. So this is sort of neutral. This sort of wicks or candles are tricky, because it was like a look above, looked below, and went to the other side. So nothing happened. And then this is a strong reversal. We'll see this, we'll talk about this, but what happened here? We entered this candle here. It went all the way down and buyers stepped in all the way here and then no wick on top. So this is a strong bullish pattern on the way up. Because you see, when you have all these rejection, that means that sellers that try to bring the price action to this level, they all got, overpowered by buyers all the way here. So this is very nice because the idea of this is like when we finish the class, then you can see some of the trades that you took today and see where do you took the trade and then say what the price action was telling me, what the wicks were telling me. Oh, I might grab that here, and this was sort of neutral, and then we went down, and it wasn't the best entry. And once you get used to read these candles, it helps on how to read the music. If it's not a perfect hammer, like with a small wick on top, is it still bullish? Yeah, it's still bullish. Yeah, if the body is green, is gonna be bullish, but it can be a weaker bullish, and we'll go through those candles in a second. But most of the times when any the what the books will tell you is that every time you open at the bottom and close on top, it's bullish, Rafael. So that's what the book says. That's but what's going to make a difference on what's happening here is the size of the wick of the body is going to tell you the story. This is a long wick, and not only that, but one wick is not going to tell you the whole story. You have to see what's going to happen next. So is this an engulfing candle? Is this a change? Is this on top of a head and shoulders? Is this on top of a double top? So you get one candle by itself is not going to tell you the whole story. That's what's magic about technical analysis, and that's why I like charting a lot. These will be the bearish variations of the candlestick patterns that we have. Same thing. Look, what happened? What do we know about these candles? We know that every red candle is going to open on top and close at the bottom. What happened here? We opened here, went all the way up. We got faked out. Sellers got in control. And look, this is a very strong bearish candle. So this is a strong signal. Whenever you see this is very, very strong. Sellers are in control, and you got to be careful, because if you're trying to look bullish with this candle, you have to think twice. Then again, on this one, we open here, went all the way high, went all the way lower, and we close here. So these wicks are kind of neutral, up, down, we open almost in the same place. And then again, this is a rejection, a bearish rejection. We open here, we went all the way high, huge rejection, try to go lower, and sort of, buyers said, well, let's not go all the way down. We got some interest to maintain the price action, or on top of this price, whatever the price is in here. So all of these are going to be bearish variations. Why? Well, just because the candles are going to open at the top and they're closing at the bottom. And remember, these mix or added with a couple of other candles, though, that's where how the music is going to play. That's how the story is going to tell you what you need to do. So here, this is sort of the things that I really like you guys to pay attention to, because this can be tricky. And sometimes when we're new, or where we're not that experienced on looking at the charts, we just see, it's commonly overseen that you are just watching, the candles up and down. You see the red ones, you see the green ones, but you don't read what they're telling you. And depending, like, some people like to go to 2 minutes, 15 minutes, 5 minutes. So this, if you want to read the 2 hours, is going to be the combination of 1 and 1, right? So if we want to see 1 2-hour candle, look how different the story is going to see. If we see it here, we open here, we went down, went all the way up, and we jumped into this candle. What happened in the next candle? It opened here, went up. We got rejection of this price action, went all the way down, engulfing. You see how we engulf the candle completely, the green candle. So this is a bearish variation. We try to go up and then bearish variation of this candle on the 1 hour, and then we jump next. But when we change to the 2 hours, what are we looking at? This is the only candle that we're going to look. Why? Because this plus this, the only thing that we're going to look is that we try to go up. The seller stepped in and pushed all this candle and sort of annihilated, and it was completely null, this candle. And this is the only thing that we're going to look. So this changes and how do we look the candles on the different time frames can be tricky, because this might look like, we were going up, then we got rejection, but then in the 2 hours we only have a strong rejection. So that's a very nice representation of how you have to be careful when you change your time frame. And this is an example. Don't pay attention to what the ticker or whatever is. I just want to try to illustrate how different this looks. So look at here, we have some bearish price action, and then all of a sudden we have this big bearish candle here. This is a big bearish candle, and then we jumped from this candle to the next candle. Remember, we opened here, then we close at the bottom, and then it tried to go lower, and remember that we opened at the low, go, and then we went higher. And this is a change of the trend right here on these candles. These two candles, even though we have a strong bearish position on that candle, the next one jumped here, tried to go even lower, and it just jumped back, rejected, and we got a change in direction. So this is where our entries on the 1 hour are going to happen. Same here. We got a sort of huge candle on the way down, then we open up on top, we try to go higher, we reject it, and then we close here and look at the next candle, the green candle here. It's a big green change of direction, and then another entry. So this is going to be in the 1 hour. But then if we look at the 2 hour of the same trade, look at how do we look. So we went down, and we have this is not a strong bearish candle. This is a very weak bearish candle. Why? Because when we jumped here, the bears try to take the price action all the way down, and the buyers bought all the candle up, and then on the next one, you see, when it's tricky, when is your entry? Your entry is when we jump to the next candle and you see that it's breaking up with a full body the previous candle, the bearish candle. And your entry should be around here, and then go all the way to this top here. So this is, but I just want to illustrate. You see, this is a bearish candle, it's a red candle, and this is a strong bull candle. This is a change of the trend again, but it's strong. Why? Because we have some very strong bearish price action, and then we jumped here. The bears try to jump it out, and then the bulls try to overstep, grab the control, and we got a change of trend. So this is I don't know if it sounds too complicated, but it's really easy. Like once you get a hold on how to read it, it's just you gotta be careful and on which price action you're looking at, and be able to see. Remember, every time we have a red candle, we open on top and we close at the bottom, and every time we have a green candle, we open at the bottom and we close at top. So we go here, down, up, and change of direction. That's my entry. That's what you need to sort of memorize. And I thought that this illustration is very nice. Then you see, this is what happened when we got on the same thing. We go down. This is a bull, like a bearish candle, and then we have the change of direction, and this will be our trade. Remember, we don't try to grab the whole move. We try to grab just a pinch of the move, and that's what we go. If we have 10 contracts or 20 contracts with this move, we have our trade done. We don't need to grab the whole thing all the way here. Sometimes we do it if we have the runners and we set up the trade to be correctly, but There's not such a thing like a perfect trade. It's almost impossible. But what I want to illustrate here is look at how when we know how to read this, we know, like, look at the rejection that we had of all of these weeks trying to break this level here and then change of direction again. So if we enter here, we got a nice action, then we'll see how this, you see weakness, 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 and big weakness and down. So this is where you need to be careful and get out of that trade if you see that this price action is not really keep on going up and the momentum it's broken on the way higher. So you got to pay attention to those sort of moments when we saw that reversal pattern on Nvidia today. Yeah, we will go to Nvidia and SPX, and we're gonna see some nice candles that now we're gonna be able to analyze the candlesticks in a different way, and we're gonna see what happened if I'm using the Bollinger Bands and I'm in a certain price action and I see certain type of wicks. Am I going to be able to read now different, like, is it going to be an entry? Is it going to be an exit? And the power of candlestick is that you're going to be able to visualize a lot better. Am I mistaken trying to go lower? I think Gunter asked me today on a bounce of SPY, like, he was asking me like if it was a good entry for puts, and that's when we had like the big bounce on SPY. So it's tricky. It's really tricky because he was watching something different. Then depends on how, like, it depends on how your eyesight it's trained to look and follow the price action. I'm not saying that he was wrong. It's just like, sometimes when you're not sure, you got to be a little patient and wait for the price action to happen. So this is a rejection, and then we have another one here. Look at this bearish price action. Why this is a bearish price action, and why this is an entry? Look at that first candle there. What happened? We enter on top, try to go up. We got rejection, and this rejection is repeated here, here, here. So if we draw a trend line here, this is rejection, 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 and then price action went down. Next candle again, down, 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 a little pullback and lower. So we're going to be able to identify when we have a sort of consolidation happening, but because we have this consolidation and another leg down. This consolidation, it's going to be peculiar and particular. Why? Because we're going to see all those weeks trying to break certain level, but not really being able to successfully break that, or try to stay above. So when we see those weeks trying to go, the logic is going to tell us that probably just going to see, it's going to get weaker and weaker, and it's going to go lower. We can have some news, and we can have, events that can make this thing just pop up. But normally, logic is going to tell us that, we're coming down for more. And then again, another the same price action. We got rejected on the way we went down. Then we got our entry on this candle here. Then we got huge, all of these candles telling us that we have a good momentum on the way up. And then look at this candle here. We got price action, rejection, and this green candle, it's not really letting us know that we still have a big move on the way up. Why? Because the next candle, it's a red one that opened all the way down and keep there. So when you see this rejection here, you're out. That's it. You see this big rejection with big wick on top of the candle you're trying to follow or trying to keep on riding, just get out or trim. Or if you got anywhere your entry around here, move your stop loss to here, here, any of the, I like to go to the upper part of the body of the candle or to any wick, either the lower wick or top wick of, one or two previous candles. That's what I'll do. So let's talk about some of these more regular, how do we call the patterns on the candles? How do we call them engulfing? Like you see sometimes flips, because I'm most of the time on VC, that he will be off. We have an engulfing candle. What the engulfing candle means is that we got a first candle and a second candle that it's covering the price action, like the whole price action of the previous candle. So remember, how do we open on the red candle? We opened here, it went up, and then all the way down, and we switched to the next candle that happens to be a green one here. And green candles open here at the bottom, try to went lower, we got rejection, and buyers overpower all the sellers of this candle, because look at where the body closed. And now this could be a change of the pattern, because just because of the body, it's higher. As simple as that. Same thing here on the bearish side. We opened here, tried to go down, went all the way up, and we rejected here. And next candle, what happened? You will think that the movement is gonna keep up, but when you see rejection on the same candle here, be aware, be careful, be fast, and then look at how huge body that it's gonna overtake the whole previous candle or previous body, and then this is where the next candle is gonna move. So just keep your eyes when you see bigger bodies engulfing, or you can call it whatever you like. That's the technical term, but being just bigger than the previous candle, that could be a change of direction on the trade that you're having. And I'm just gonna go for fun for some of the names that we have on the candles. Not everyone, you don't need to learn this. It's just you just need to know how they work. But all of these candles have some names. So this will be a hammer. Hammer normally are on top of a trade, or a double top, or if you have a head and shoulders at the top. Right? Well, it looks like a little hammer here. They open here, they go all the way down, and buyers are in control, step in and close here. So that's why it's called a little hammer. A shooting star, it's interesting because any of this can be either at the bottom of a chart or at the top of the chart, but they're going to mean, a change of direction or a weakness on direction. Shooting stars, remember, what do we know about every red candle? We open at the top and close at the bottom. So we open at the top, we went all the way up. We're like, okay, we're killing it. We're on SPX, we're making money. And then all of a sudden, down, all the way down, we're out and move here. So that's going to be very careful. Can you check these ones on the right? Is the compound for port? Thanks. Yeah, we'll go through those afterwards, Norberto. So these are the dragonfly or the gravestone dojis. These are sort of nothing happen. We enter here, go all the way up, all the way at exactly the same price that we got in, and nothing happened. But what's important about these dojis is that you have to mark that there was some interest into drive the price action all the way to whatever this level is, but it got overpowered by, in this time, the bears, and then we open up here for the next one. Same thing here. What happened in this one? Well, we open here, went all the way down here, so there's interest to try to drive the price to this, whatever this price action is here, but then buyers overpower the sellers, and we close at exactly the same entry. But this could be a change of direction on a trend. So keep your eyes to any of this. Same with this. Morning star and evening star. Morning stars are on top of these candles. It's sort of a neutral candle between, a change of direction. Evening star is going to be at the bottom. And remember, what we know now, we enter here, went down, up, switch here. We went up and down, nothing happened. And we just changed dramatically to a lower candle. So this it's just a neutral candle and change of direction. So, but you always got to be careful, because this means that no one was in control here, no one wanted to take control, and then all of a sudden, whoop, we got this section here. Yeah, look at that. I don't know, you don't have your name. It just says iPhone, but yeah, that's on the chat. You see that's indecision. You see we have one one on the lower, then you thought that we were coming down, and then all of a sudden we got buyback completely up in Costco, and the price action went again up. So yeah, that's a perfect example of what we're talking. I can't read what the time frame is in that, but that's a very one. Why do indices and SPY and QQ like round numbers? For example, today QQQ, it's a daily. Okay, yeah, that's a beauty of an example. Normally those it's the round numbers, Norberto, on the Qs and the SPY is just because that's sort of an agreement from where the price, like traders like to have round numbers, sort of. So, and you will see it on the higher time frames. We don't have the decimals and all of that. We just go from 554.5, 554.10, 554, 555, 555.5, and that. Like we jump from price action to price action. So then we got the tweezers. Tweezers, these are, it's really funny. They look like a little pair of tweezers. They can be at the bottom, they can be at the top. And again, what do we know by memory now, guys? Every red candle is gonna open at the bottom. It went all the way down. We got bought back here and close right here. So we enter here, we went all the way here and close right here. Remember, open at the top, close at the bottom. We open here, try to go all the way, and buyers stepped in, and then every green candle we open at the bottom and we close at the top. So we open here, again, try to take the price action by the bulls here, by the bears here, and then bulls step it back here. Same thing here. So you gotta be, pay attention. They don't need to be one next to the other one. We could just, but normally to be a tweezer is just like, interest on the price action here to go all the way here, nothing happened, and then again they tried again to do it, and we close here. So it's a sort of nothing, because open here and then open here, and when we enter this one and close it here, we open it here and close here, and we are in the same price. So even though there's movement, we just stay at the same price, and same here. It's interesting. Now, how do we, what the teaser indicate where the price is going? It can be a change of direction, Nash, because even though you enter here, and we went all the way up, if we have another, like a tweezer, what happened with the tweezer is that we stay at the same price, and from here, when we got the red candle, we opened the red candle here, went all the way back, then the green candle opened here, and normally after this green candle is going to be another green candle, and we're going up. So this could be a change of trend. Same here. We open it up here, here. We went all the way higher here, switched, try to go and go back down. So we enter and we exit here. So even though it was interest and try to move the price action here, probably the next candle here is going to be a red candle. So we're going down here. Now this one is going to be like at the bottom of a V, and this will be at the top of a I don't know, a pyramid here. And then this is another thing that now, to be more accurate as what we really trading, what happened if we add an indicator? No matter, don't care, like this is the 200 EMA, but how do we use this, candles? Because we can use the candles to trade, but then remember, we have more tools to help us decide what's happening. So that's how we call our EMAs, SMAs, we call it, or the Bollinger Bands, we call them dynamic because they move with the price action. And then if you have your price, your levels, this is your price levels are fixed because it's a price, they don't move, it's a whatever price, the price action is happening. And then we can see, what happened here. We went up, we got a little look above the trend or the indicator, and then we got a rejection out of that indicator, and then we went down. So this is just a little graphic example on how do we use the candle reading that we are learning right now, plus our indicators, to make a decision. So we know that, we got up, we got a rejection. Then this strong candle here is telling us there is a rejection, and you could enter your put, trade right here, because this is a confirmation that the next candle after this level still going down, and then we're going to keep going lower. So this is how you see and read while you have your dynamic levels. Remember, what do we don't do anything by just reading the candlesticks. We need to have like more help to decide, do I get in, do I get out, what do we do? And then if I only have the my dynamic levels, my EMAs or anything, that is not telling me for sure, like yes, it's gonna be the same for the upside or the downside. We'll see different ones. But right now, what this is helping me is it's gonna make me help to make the decision if I get in, I get out, or I don't, I'm trying to go into calls and I see this rejection. I'm not gonna jump into calls right here. Why? Because we'll see that we broke below this whatever EMA is, and we're trading, lower, underneath. This can be the VWAP. Then we try to break the VWAP, and no, rejection. And even here, look at this. Look at this weak action here. Look at the price action. It touched the EMA and rejected it. So this level, it's been a strong rejection for all this period, all this time. So that's gonna just help us decide if should I enter, or if you are on a trade, it's gonna tell you, you're safe to keep your trade in. I mean, we try to break up, maybe you trim and you try to get out, but you can, leave some runners, and this thing just kept going down, down, down. And here, now we have, how do we use not only the trend line, but then we have some resistance. That's why we use some of our fixed levels. If you see look at these wicks here. Look at the wicks rejecting. So whatever price action we have here, or level that we have here, this level, try to break it on the way up, and we just rejected it again. So what can we tell out of this? That, price action doesn't want to be above. Remember that we normally, how do we step to different levels on the way up or the way down? We got rejection, and normally we break up, retest that rejection, and the price action makes that rejection support. So that's how we have levels, and that's how the price action works. Whatever we have support, sometimes it becomes rejection, and when we have rejection, then we have a resistance. It becomes support if we are going higher. Why? Because we would have break this level and then retest it and then go high, like little steps somewhere around there. But here we have rejection and beautiful flush back down to the trend continuation that we have here. And the body band, what are we to look for? I hope my question makes sense.
Yo, Empanada, I have a question.
Shoot it, Norberto. What's up?
So the perfect example for your class today was Apple. If live trading, it broke pretty much on the day, it broke its support, and when it broke that, it just flushed, and that's when I think you were calling out Apple puts, right?
Yep. And you will see it. Like, we will go through Apple, and we will go through the different time frames. Because as I said, if you are in the 30 minutes or in the 1 hour on your daily, it's going to tell you something completely different. And depend on what's your purpose. Are you trading long term? Are you adding just to your port, and you don't care about the noise that the smaller time frames does? But yes, what we wanted to see today in, for example, Apple is you will see, like, how do we try to break a certain level, which is this time was 227.49, which was the overnight high. That's interesting. It was the overnight high. We rejected it 3 times or 4 times, and then we broke down. And that's where it was interesting, because we went to our yesterday low. So when we go through Apple, we're going to see how the candle action kind of help us decide that we were coming down, get into puts, and then where was our rejection, where we needed to get out, even though we had more space to go lower. But yeah, that was a good example. Let me see, how many rejections do you confirm? Do we wait for 3 rejection to confirm from the resistance level? There's no a specific amount of times. You just need to be careful. Like if you see like, you know, 1, 2, 3, 4 times rejection, you just gotta be careful. Like if you see 2 rejections of a level, you gotta be careful because that means that they are either buyers or sellers, depending on where the trend is going. They want to go opposed to what the price action is happening. So I just keep my eyes open. And when we go to some live trade for today from the price action, what happened today, it will be easier to see this. We're going into only the sort of the basics right now and the definitions, and then we'll go through today and we'll see some great examples. Like we have Apple, when we go to the 1 hour and the daily, we will see some nice things, and same with SPX. On the recent Dell swing you took, yeah, how do you know the entry setup or where you're looking at? Of course, Tim, we'll go through that one too, okay? And let me just take note here. I'll go through all of those and add it to, I got here Dell, we'll go to Apple, and then I will go to Northern at the end.
मम्मी ਨੂੰ ਲੈਪਟਾਪ ਤੇ 3 ਆ
Yeah, I got you guys. What SMA do I use? I'll show you when I go to my charts, but normally I change. I don't have only one. I like to have the 10 and the 21 and the 50. Those are my favorites. But I do like to have the 21 and the 200. 21 and 200 are very nice and simple when you're going for a longer time frame. Sorry
Yo,
about that.
guys, whoever's in the
I muted
mic,
it.
please have some respect.
Don't worry, Norberto. I muted it already. You're good. Thank you. So let's keep on going here, and we'll talk about those different examples, and then we go through those 4 candles at the first point of the resistance will combine into a shooting star too. I'm seeing it right here, Rafael. Here's where you mean it.
No, Empanada, in that first point of the resistance line.
Here?
Yes, right there.
No, I mean, this could be a shooting star if we move into a higher time frame.
Yeah, this is what I mean. If you combine those, they will look like like in a 20 minutes, for example.
But the body of this shooting star is not going to be too like it's not going to be as it's going to be something like this when you combine it.
Okay, I see.
It's not going to be as big as this. It's not going to be as pronounced as this, because when you see the price action here, we look at where the body of these ones are and look where the body of these ones are. So the body is not going to be as low as you will expect to it. It will be higher here and then a big wick lower.
Yeah, I'm thinking of those 4 candles that they are kind of like the range.
Yeah,
you know, and then it breaks down.
And then it breaks down completely. But that's it. You know, I invite you guys, when you see this now that you're becoming more curious, if you go to this example, if you see something like this in some of your daily trades and change the time frame, you will see how the candles are going to change and how you're going to be able to recognize a lot faster when this is happening. And when I go to, and I show you, when I go to the 2 minutes, I like to see the 2 minutes, not because it's easier, because it's going to give me a fake out, but I want to see which levels are we resisting or holding a lot more. And I see where the strength or the weakness is happening. And then I jump back to the 5 and the 15 minutes. And we'll see some examples in there, and you will see how nice and different it is. Doesn't mean that you have to go to the 2 minutes. Please don't. The recommendation always is don't go lower than 5 minutes. If you're doing day trade and scalping, if you're doing longer term, like 1 week or swings, you can go to the 50 minutes, 1 hour and half an hour, and you'll be erasing all the noise of these tinier moves that you don't need to be worried about. And Bernard, you will have a PowerPoint PDF slides for review. Yes, Chen, these class are always posted on the live lectures. And they're probably 1 or 2 days after the class, they are posted, all of them there. And if you don't find it, just DM me and I'll send you the links. So don't worry. You show us later your chart for time frame when you draw your levels. Yes, I will show you my charts and how do I do it, and we'll go through the candles. It's I don't have, there's a couple of more slides here and then we'll finish. So this is what you were talking, Norvin. This is the opposite from what we're looking. This is my dynamic support. And then what do we have? Look at if we don't go through the details, price action bouncing, look at how wicks touching and support. Then this is your entry. Then when you touch another entry, and when you touch another entry, when you see this price action, this is like sort of a beauty, just, so easy to trade. And you don't need to worry, because you will be worried to getting out of this position if you see a break and hold below the trend. But if you see these tiny touches and the price action just moving around, but then just going up, you just keep holding. You don't need to be you just need to be, aware of what's happening. But if you don't see it, even here, you see there's no a clear break. It touched and it went up. But this is where, depending on what time frame are you looking at, you will see maybe this is the 50 EMA, and this is I don't know what example. I took this out of the internet, but let's say that this is a 1 hour, and then you will see this in the 5 minutes, and you will be probably there's 3 candles here or more, and you will be like, oh, I need to get out of here. And no need to. The only thing that, yes, you can get a couple of the candles, no worries. And then here you will see that we just bounced, nothing happened, and the price action kept on going. So you can grab a entry here and just surf the whole trade all the way up here. So you will be grabbing, this is your exit somewhere when you see all this resistance, and this is your gain that you had, and your exit will be anywhere here. So just examples. We'll go through those. Look at this resistance. This is also some of those examples that we have on our everyday trading, guys. You will see, this is our support, we went down, nothing happened, support, and then breakdown. This is our, retest. So what's happening here? We were trading above this price action. We were using it as support, and then we broke it. And normally we can just go up and then keep going there. But no, this is a confirmation of the resistance. This is a confirmation that we have a change of the trend. We have a change on this price action that happened here. Now, nope, we're resisting. And then another confirmation with a tweezer here. We try to go up, nothing. We try to go down, nothing. And when you see, this is where I'm telling you, remember, what happened to the green candles? We open on top, on below, and we close. So we open below here, try to go down. The bulls try to break this price action, and they were not successful. So what happened? We went to the next candle, try to go again, and then we have a double confirmation that is not successful to this breakout. This breakout is not successful. It's 2 rejections. And then what happened on the next candle? And this will be my entry. Red candle breaking below the tweezers lower wicks. My entry is right here, anywhere on this candle, and all the way until support, whatever you want to get out of here. So this is a great example on how this works. So in summary, guys, candles has an open high and a close. The body of the candle and the wick and the bodies relative to the wick is going to determine who is in control. So depending on how big the body of each candle is going to determine which side is in control. And do not trade candlestick without the help of other indicators or levels, because we're not going to know, and we don't have enough information to really make a educated decision on we should jump in or out of our trade. Okay, so yeah, Gail, I love these candlesticks, because as I said, it's so easy to click and get into a trade and get out. But when you start reading a little bit more on what's happening on the trade, it makes a difference. So candlestick reading, it's a huge part of it. I'm going to change to my screen here. And all right. So you should be able to see my full screen now. This is my daily screen, guys. This is where I normally see my, this is not where I trade. This is where I make my sort of investigation and levels on what's happening. This is Apple. I have the 1 hour and the 5 minutes. And let's go to the, I'm gonna go to the 1 hour first, so you can see how this, look at the opening. What I was looking on Apple is, look at what happened on the price action. Let's go to here. We got a sort of a shoulder, head, and shoulder, and we broke this level, right? So I knew that this level was very important. Look at this level, rejection here. Look at this candle. Look at this beautiful, powerful red candle. It opened here, tried to break up, and look at the body, no lower wick. Huge candle, completely power, you know? This was complete day that if you bought puts, that's the only thing that you needed to do. Then again, look at all the hold of this level. So we have this support, and what happened to this candle this day here? We touched the same support and rejected it. Then we make a little bit of a trend and broke it down. And then this candle was key, because this candle on the 1 hour told me, okay, we're coming with a lot of power to break down. Let's see if we hold the same trend or the support that we had here. We hold it, and the next candle, we open here. We try to regain, you know, this support level, and bull and bears said, nope, we're not, we're gonna break down. We broke all the way down, and we finally broke our support level all the way until here, and next big bear candle gave us the entry to this new support. So what do we have now? Remember what I told you about how do we trade in blocks? This is where the price action was happening before this break. And what do we have now? This is what the price action was going, and then we broke, and now we have this new block right here of price action. And this new block, it's telling me that, well, now the price action is happening here, here. And now I resisted one time, and I resisted today. We try to break back to this level, and look at what we got here. This is a 1 hour. Let me see how this looks in the daily. In the daily, we're holding, look at the 20 daily SMA. Let me take this out because these are a pain in the neck. We're holding exactly on the 20 daily SMA, trying to hold there on Apple, but we have a bearish move, and well, let's see what tomorrow is going to happen. If it's going to try to go a little higher, but then on the 15 minutes, this is what happened. Look at this candle. We got rejection, all the way down. We open here, try to break it again, and huge candle on the way down, and sort of neutral, went all the way back. Then again, another test, and then another test, and at the end, weakness and breakdown. So this is a resistance, like doesn't have to be 1, 2, 3. Look at this, just 1, 2, 3, 4, plus this gave us, and then of course, what's when I was telling that you need to have more indicators, what else I have? Well, I know that my red, every time that I see my rejections are in red boxes like this. So I see that we try to break into my rejection level and we reject it. So perfect. Then we try to hold on top of my green one, and we were not able to. And then, so I have candles telling me that we're not going up, that we're finding weakness. My levels telling me you're not breaking up, you're breaking down. And then I have BWAP. This is BWAP. That's the only thing that I have here. BWAP, we try to stay above BWAP, and then we broke below BWAP and stay below BWAP until here. This was a beautiful trade here. Boom. Then hold, and then look at this candle. This candle open up here, down, went all the way down, and we have a strong buyers again, changing the direction to another hole here. So do you have videos on how to make the red and green zones? No, these green zones are made, these are my levels, Nash, and I just make them by drawing boxes like this. If I draw a triangle like this, like for example, I don't know, let's say that I got a new level here. If I have a new level here that I will click here, I will add a sort of a rectangle here like this, and then I will just change the color. I'll change the color and I use transparency, and that's it. I just use 85% transparency, and that's how I do it. I don't want to do it right now because my graphic card is a little bit weak, and when I do this, I have this thing. I need to reset my TOS. So what I do is one trick that you can use in these guys, as I always said, if you have one of this set, and same with the levels in TOS, if you highlight your level and click space, it's going to duplicate. Same with I just draw one red and one green, and then you highlight it, spacebar, and then just place another one wherever you need to have it. And that's how I do every day my levels like that by hand, one by one. But I just move them around. That's how I set up my levels. And then if I go to, and my normal set will be 5 minutes and somewhere higher. And when I'm trading, my 5 minutes is going to be like this. I try to go very into detail. These are my Bollinger Bands for Gale, my Bollinger Bands, and my BWAP. On my Bollinger Bands, what I do with it is here, I don't use the mid lane. I uncheck my show plot for the mid lane, and I use instead my B-band, my BWAP. So I use my BWAP, and then you see here, rejection out of the top of the B-band, rejection, and when we go below my BWAP and a rejection of the upper B-band, down, 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 when we start to have a little, distance out of the lower B-band here, this is how B-bands work. When you see that we are outside the B-band, and then we move higher and we find some space away from the B-band, that's a move to go, higher again. And that's when we went all the way here. And then when we touch BWAP, you get out again. And then out of curiosity, did you also start with small account when you started trading? Yes. I started as an investor. I used to save, just add money to certain names that I had Apple, IBM, Bank of America, stuff like that. And I never traded, like actively traded. And I started trading a little more actively. I lost a lot of money. And then I needed to find some help on knowing what I was doing. And then I found OOT, and that's where I've learned, literally everything about how the options work, and another world. It was just a different level on knowledge and how to invest and trade. But yep, always remember, it's always great. I want to be a successful trader to start with $1,000, $2,000. Be very careful, be very, very patient, try to read and learn a lot, and do paper trade. Remember, I always tell you guys, this is one of the things that happen with trading is we don't practice enough, and since it's just too easy to jump into the market with real money, we lose it. We ended up losing because we don't have the experience and the practice that we need. But if I want to do like a metaphor, if you're a soccer player or a tennis player, you don't grab the racket and you just jump into the US Open, right? You have to have hours and days and years of practice, and then you try to go to the big matches. But here you can jump to the market, and the market is the big match. Every day on the market, it's a big match, and you got to be very careful because you can lose big, and then you can revenge trade and then keep on losing, and it's a big black hole. You got to be very careful with that. So practice, set up exactly. You have fighters train every day for 3 fights a year. That's my analogy on that. And remember, the Olympic guys that go for the running, for the track and field, they are 100 meters. That's like I don't know, 5 seconds that they run those things, or 6 seconds. They train for 4 years to try to go to the Olympics to run for 5 seconds, 6 seconds. And then we just download Robinhood. We put, $1,000 and we trade and we lose it and we're pissed because we suck. No, guys, we don't suck. We just need to put the effort and the time to learn what we need to learn. And it will become a lot easier when you have the practice and you have the eye that we need to have. So don't get frustrated. Don't be hard on yourself, but it takes time and it takes practice. That's all. There's always a lucky. My first trade ever in options, I did $1,000 with an Amazon trade on Robinhood. And I was like, okay, I'm really good at this. And of course, like 3 days after, I lost like, I don't know, $3,000. So that's how it is. So what else do we have here? Let's see. SPX. Look what happened on SPX. This is our 5 minutes chart on SPX, and this is where you need to be really careful. These charts here. Look how we thought that we were going higher in these wicks, and then we touch the upper band, and then look at these wicks. This is where you get killed. You think that this wick is going to go higher, because this is a strong, reversal on the upper side, and then we open here, went down, close here, and what happened to this wick? This wick went all the way higher, getting, playing with our emotions and telling us, okay, this thing is going to go a lot higher, and then down. And then this one was sort of the tricky one, telling us, yeah, we're going higher, don't worry, keep holding. And it just sucked the air out of the whole contracts, and we went completely red on this. So this is what you got to be careful on contracts, and this is where knowing how to read these candles, it's going to help you to be careful. Listen, if you see this candle here, don't jump into SPX. You don't want to be there. Let's go to
Empanada, I have a question.
Yes.
You think for next class or whenever you do a class again, you think you could do a class of liquidity? It's kind of like a rubber band.
Yeah, we can talk about that. The problem about liquidity is that it's a broader economic subject, and it's not necessarily. I mean, I can talk about liquidity when I go to probably to when we talk about the open interest and the volume on the contracts, and this is how the liquidity of the option contracts are gonna be set. But talking about liquidity in general for the market and for the tickers, it's a very, very broad subject, but we can try to add it to as a add-on to one of the classes, so we can know the basics on what do we need to know. Yeah, we can do that, Roberto. Somebody asked me about Dell and why I took the Dell trade, and this is how my chart in Dell looks like. This is why I took it. Look at what we had here. Look on the 4 hours. What happened in the 4 hours? I have these two important levels here. So I got this level that we broke, it becomes support, and then we broke it higher. And what happened when this level broke higher? I wanted to see, this hold of the same level. When we held the same level at 123.4, I say, it could be a little push up if we respect the levels that we have. So I had this level drawn. So that's the 4 hours. In the 1 hour, this is how it looked. We broke the 20 daily SMA, the 50 daily SMA, the 100. We kept on flushing, but we resisted that level. And I'm like, why not? Look at this move that we had here. And then on the 50 minutes, I'll say, you know what? Let's give it a try. We have this little gap down. I draw this sort of trend line. When I had this was from here to here. Needed to touch these 2 points. After 2 points, I was looking to hold the trend line, and I enter here. And I enter here. We went lower because I said, like, damn it, I wanted to see if we went all the way high. I mean, I trimmed some contracts here. And then I said, let me see if we hold. And today, look, where do we kind of reject it? This is the 100 daily SMA. That's the point that I was expecting to have some rejection, because these EMAs are, or SMA are normally rejection points or points of support. And since we have it on top, it's going to be really hard to break it up and you know, try to keep going to the 50 daily SMA. So that's why I was on this trade. That's why I liked it. And I also, it was also because there were some news on Dell talking about how the technologies with the AI, etc. So this this is how, since we took the trade last week, this is how I picture it. My exit was on this lower bottom here. This is where I like to take somewhere around this level. This is where going to be my RR. So my risk reward is going to be somewhere around here. I will be trimming all the way up. And if it touches whenever here, I'll be out, because I took it somewhere around this area here. So that's how I like to see it visually for myself. Every day, no way. Everyone want easy money nowadays. It's easy to gamble, yeah. It's we got to be careful, guys, with protecting our capital. Losing the capital is the fastest and easiest way. And remember, we're trying to make money with our own capital, and that's one of the most difficult ways to make money. If you have another job that it's, you know, putting money to your account, and then you would like to throw some to the market, that's great. But if not, you got to be very, very protective on how do you take your trades, and be patient. Don't take too many trades per day. You don't need to. With one trade, you can be done on the day, and be very careful. Some of the people, because I want to yell at you charge levels. Yeah. Remember, Gail, we have a lot of people, a lot of members. Everyone trades differently. Everyone has a different size of board. Everyone have a different experience. So sometimes when we jump all together to VC trying to make a trade, it's tricky. Always, I'm gonna say two things that they're always gonna, you know, always you do yourself. You do your port, you do your sizing. You are the one, you know, clicking. Don't follow anyone if you're not agree, or you don't like, or you don't trust the trader they're taking, no matter who they are. Could be Flips, could be me, could be Tilio. If you don't like what you see, even if it's out of ignorance, out of trust, out of gut feeling, whatever, don't take it. Take the trades that your eyes and your expertise are telling you that makes sense. And we have been in the same trades. I'll be on the upside and Flip will be on the downside, and we are at the same time in the same name. And you know, everyone is looking something different. So trust what you are trained to do, and train what you are going to do. So yeah, I agree with you. Thank you, Gail, Nash. Do you know when the daily SMA and exponential SMA, what the difference? I use the daily SMAs on my bigger trend trend times. This is how normally how my charts are. I go for the 15 minutes, 1 hour, and bigger timeframes here, and I only have, this is the 50, the 20, and the 100 daily SMAs, and I will just look to see where they are with respect of the price action. And here on my actual trade screen, I'll change this. I'll change these. I can be using the Bollinger Band today because I like to play it, but if I don't feel comfortable, I just go to my studies and I just change it for, maybe I will go to the 8 and the 21, you know, cloud. And if I go to, let's say, ENTC, I'll use the cloud here because I'd rather see the cloud on this trade. Every time that the red line crosses the blue line and you find space, that's an entry. When you have some space, that's when you hold. And, you know, it depends. So I don't have one specific EMA that I use. I go through a lot of them depending on which one I feel looks better for what the price action of the name is doing. Let me say that again. I will change my EMA depending of the name that I'm trading and what the price action of that specific name is doing. That makes sense? I hope so. So it's not, remember, your EMAs are going to be your visual aid to take trades. And depending on, you need to feel which one is going to be the one that is going to make you more comfortable. So sometimes it will be this, sometimes I will go to the 9 and the VWAP. I just go to the 9 and the VWAP, or I can go to I have, sometimes I'll go to the 50 and the 200 and I just leave it like this. I love this setup. I love just the 50 and the 200 because it's easy. You see the crossings. When you see the crossings, you know that this is happening. When you see the crossings up, it's a, remember, all the indicators are laggards. So, but it's, you know where to maintain. It's just easier to do that. I really like those, but it depends, guys. Now I'm really enjoying trading with the B-band and my B-web, and I just try to follow it to the T, how they work. Every time that you see a touching the bottom or going outside the bottom will be an entry, and then you just hold until you go back on top, and you help this with the candlesticks and your fixed levels. That's how. Which one do you uncheck? I uncheck the middle one, Gail. Here, I just uncheck the one that says the middle line. I just uncheck the show plot and I leave the lower and the upper, and I add the BWAP. That's all. So the BWAP is going to be the middle. And every time, remember, so how do we use the BWAP? Every time we are on top of the BWAP, you're bullish. Every time you are below the BWAP, you're bearish. Fairly simple. Very simple. So I have BWAP on my higher time frames here, and I have my daily. Look at this resistance on Intel. Look at this beauty. This, we went down. Where do we touch today? Twice. I'm gonna go to the 5 minutes on this beauty. This here, guys, the 20 daily SMA. What happened here? Hold it, bounce back, broke above the BWAP, Intel. So that's what I like to see. So while I'm watching the 1 hour on this, I just like to see this type of move. We went down, we're holding this support, and we're breaking up. So what will I like to see on Intel tomorrow? I hold of these 33.27 and try to see if we go back again to wherever this level was. And I just, I go through this. So I can, sometimes I can just watch this, or if I feel more comfortable on the bigger time, I just maximize my sell and I go through this and I just keep watching this. And here you can jump to one side or the other one. Or sometimes if I go to my flexible grid, I will go to my flexible, and this is how I trade. I got either name here or puts and calls, or calls and puts, and I go to my 2 minutes. This is my 2 minutes where I see, look at Apple that we were talking today. Look at price action in the 2 minutes today on Apple. Look at how do we, nothing. And where something really happened when we broke down all of that, these EMAs. And you see on the 2 minutes, I used a different set of, and let's see where we are here. You can look at it. I got my 50, my 9, my 200, and my 20. That's how I use it here, RSI. So I see how they were breaking all of them lower. And that's Apple resistance today with the weeks, all of these resistance. So do you want it to jump here? Do you want it to jump here? No. That's why, look at, this is 9:30 a.m. and where we have the break was at 11. We don't need to be trading any of this, nothing. We just need to see when we have a clear break of the trend and hold down. If I change this to my B-band, this is gonna look like this. Nothing, hold below my BWAP, and here's my confirmation, sort of. So that's what we're looking for, guys. Active trader. I don't know what we have. What else? Which one you brand? Thanks. Will you say that the candles help you with the B-bands to time your trades? Because a lot of times I get stuck in a trade that eventually makes the move I want to take it up wherever. It's about patience. Yeah, Omar, what Gail is saying, it's about patience. You need to mix you need to mix what the candle is telling you, and always remember, guys, this is trading. It's a little bit of a leap of faith on whatever you're doing, your levels, your price action, or your charting. I'm gonna get, I don't know if you guys, any of you guys who remain here like Dune, the movie, but I love those type of genre, and I love that movie. And on the second movie, the witches, the Bene Gesserit, they say that we don't hope, we plan. That's a line that I would love to take for trading. We don't hope, we plan. We plan our trade, and even though doesn't matter if your levels are off or the price action that you're reading is off. If whatever you are planning, go with what you're planning and try to stick to it. And then use your stop loss, use your take profit whenever you need to trim. Once you have a plan, there's no doubts on what you need to do. So you need to know where you need, like, for example, if I'm here on, let's go to NVIDIA. I know in NVIDIA that this level here in NVIDIA, I'm not trading calls if I'm getting close to this level here. Why? Because this is my red level. My red level means this, like if you see my 1 hour here on NVIDIA, green level, support. What happened today? We support. And if I take this trade here, I'm not taking puts unless I'm below my level there. So here on the 5 minutes, I know that we needed to hold above this level, and then the retest, and was my entry on calls. It wasn't this, it wasn't this, it wasn't any of this. It was this one here because it retests the same level that the pre-market that we broke up, and we are holding that level up. So you need to be able to have faith, and this is my level, this is my price action, I believe in this, and if I get in this level, I will commit to my price action. All right. So do you prefer Colombian or Argentinian empanadas? Argentinian, even though I'm Venezuelan and I like them fried and everything, nothing like a good baked empanada. Chilean and Argentinian, guys. All right, guys, I extended. Thank you for the extra 30 minutes today. I get carried away talking about this. There's so much information that we can keep talking about. If you have any questions, just let me know. Thank you for the company. If you would like to add any subjects or anything else, just let me know, and we will try to make new classes. Norberto, you want to go with me? And if you can stay, Norberto, and I'll go to those names right now. For everyone else, have a great night, and I'm just going to go through some names with Norbert right now. Yeah, Dolly, thank you all guys for the patience and for being here late at night trying to learn a little more, and for the company. I love to do this podcast, but sometimes it's a little lonely if you are by yourself. But any question, guys? The idea is to set you up to success. And I would like everyone to make money with us here and learn and keep learning. And I learn from you every day. So thank you. Roberto, let's do your name. Let's say STRL. Let's see what we have here. I'm going to go to maximize my levels here. And I'm going to go to the 1 hour. I don't trade this. I don't have it charted. But look. This is looking very good, Norbert. Look at the price action. What happened here? It went down, rejected on the 100 daily SMA. We have a breakup, and then we are holding that 100 daily SMA perfectly. So if I do my channels here, that I like to do normally, I will put my channel here and my channel here. This is where we are. So you need to try to go here and try to go up or break above this channel and hold this is the 50 daily. So we are bouncing on the 100. That's a great signal. We're breaking the 20 and breaking the 50. What happens now? We need to see the 20 daily SMA crossing the 50 daily SMA. So I need to see this crossing this to guarantee that we're going to keep going up. So that's STRL, Sterling Infrastructure. Robbed. I don't know what is this. Is FT artificial intelligence robotics. This is the same. Look, holding the 200. They're breaking up. Like we have some all of these. Look at this. This could be Norbert. Look at shoulder, head, and shoulder. So you gotta be careful. This doesn't mean that we have a change of the trend. So be very, very careful for that. Here, but you see that we're holding these levels, which is that very encouraging, and we can go up. Let's do something, Norbert. You want to go to let's go to the to Discord to live charting, and so we can end up the class. So all of these is not going to be added to the recorded class, and we can jump to Discord. Okay, let's do that, and we can keep going there. Guys, thank you very much for everything. Have a great night today.